All right, let's start with the latest on energy markets, and oil prices are moving higher as hopes of a quick reopening of the Strait of Hormuz fade. Brent crude has climbed to nearly $90 a barrel from about $83 at the end of last week. But prices remain well below the $110 peak that was recorded in May and the brief move above $100 last month. The market had priced in a possible US-Iran agreement that could restore shipping through the strategic choke point. That deal has yet to materialize, with Iran demanding conditions before the strait can reopen. For now, traders are still betting on a compromise that could allow at least some energy flows to resume. Analysts warn that this relatively calm oil market may not last if the deadlock continues. Markets are currently pricing two competing scenarios: a relatively quick reopening of Hormuz or a prolonged disruption. Now, if the closure stretches into the coming weeks, traders could increasingly price in a sustained supply shock. That could put pressure on global inventories, particularly in OECD economies. Capital Economics estimates that if inventories continue to fall rapidly, the market could reach a tipping point around the start of the fourth quarter, when stockpiles can no longer absorb the supply shortfall. Historical market behavior suggests that could push crude towards $120 to $140 a barrel. Several factors have so far cushioned the oil market. Alternative export routes have helped bypass some of the disruption, while weaker demand and higher production have reduced pressure on prices. China also played a major role by cutting crude imports in May, helping balance the market. But Chinese imports recovered in July and are expected to rise further in the month of August. That removes an important cushion against supply shortages. Analysts say that markets have also been too quick to price in a return to normal shipping whenever there's a hint of a deal, even though physical supply constraints remain. Now, if Hormuz stays closed and inventories keep falling, the current oil price calm could give way to a much sharper rally.